Please help this channel grow by hitting like and subscribe.
Alright, today we're putting electric vehicle maker NIO right under the microscope. We're going to do a deep dive into its stock chart and see what all the technical signals are really telling us.
So right off the bat, as we're doing this analysis, NIO is trading at $4.59. And yeah, that giant red arrow, it pretty much tells you everything you need to know about the recent direction. This all sets the stage for the one critical question every single person watching this stock is asking themselves.
Is this a company that's in some serious trouble with a lot more pain on the way? Or is this a potential buying opportunity? A solid company that's just on sale right now? Well, the charts might just give us some clues. To figure that out, we're going to treat this whole analysis like a doctor's visit for the stock. We're going to check its vitals, run some advanced diagnostics, and then come up with a prognosis. So let's scrub in and begin the technical checkup. First up, we've got to look at the overall health report. Think of this as the top-line summary from 10 key technical metrics that traders are watching like a hawk. And yikes, the initial diagnosis is not looking so hot. A full 50%, that's half of the indicators, are flashing bearish signals. And get this, only one single indicator, just 10%, is bullish. The rest are just kind of sitting on the fence. So this tells us right away that the weight of the evidence is definitely leaning negative. Okay, so with that pretty bearish outlook in mind, let's go a level deeper. It's time to check the patient's vitals. These are the core trend indicators, kind of like a stock's heartbeat and its blood pressure.
We're going to start with something called the Simple Moving Average, or SMA. The easiest way to think about this is like a baseline for a stock's health. It smooths out all the crazy day-to-day price noise so we can see the real underlying long-term trend. See, a healthy stock trades above its key moving averages. An unhealthy one, well, it trades below them.
Now this is where the problem really comes into focus. Look at this. NIO's price, at $4.59, is stuck below both of its key health levels, the 50-day average at $4.86 and the even more important 200-day average way up at $5.25. This setup is pretty much the textbook definition of a stock in a downtrend.
And this quote just perfectly captures the feeling of this decline. It's not a sudden, dramatic panic crash. The source material calls it a grinding, dispiriting decline. It's that slow bleed, that drip, drip, drip that can be just incredibly frustrating for anyone waiting to find a bottom.
Okay, time to move on to our advanced diagnostics. We've established that there's a downtrend. The patient is sick. Now we have to look at momentum to figure out just how severe the condition is. This is like going from using a stethoscope to firing up the MRI machine.
And the key question here is really how fast is this decline? Is the downtrend maybe losing a little steam, or is it actually getting stronger? Momentum indicators help us answer exactly that.
Just take a look at the Relative Strength Index, or RSI. This shows a pretty dramatic plunge in just 5 days. 5 days ago, the RSI was chilling near 59, which is basically neutral. But now, it has absolutely plummeted to 39.39, which is firmly in bearish territory. That rapid of a drop tells you aggressive selling has really taken over. The analysis uses a perfect analogy to capture this feeling. It says the momentum is the technical equivalent of a car not only moving downhill, but picking up speed as it descends. So here's the crucial takeaway. The selling isn't just happening, it's actually accelerating. And as if that wasn't enough, another key indicator, the MACD, totally confirms this diagnosis. It just had a bearish crossover. That's a classic sell signal for traders. And on top of that, its histogram is negative and it's getting bigger, which just reinforces the idea that bearish momentum isn't just there, it's getting stronger. But, no diagnosis is complete without looking at all the data. And right in the middle of all this bearish evidence, our checkup actually found one small anomaly. A single little data point that's pushing back against the trend.
So what is this one bullish signal that somehow managed to stand out from all the rest?
It's called the stochastic oscillator. It's a mouthful, I know, but its current reading is just 16.53. Now, in simple terms, anything below 20 is considered oversold. This suggests that, at least in the very, very short term, the selling pressure might be getting a little bit exhausted. It's a potential sign that a temporary bounce could be coming, even if the bigger trend is still pointing down.
Okay, so we've completed the diagnosis. Now what? Well, now it's time for the prescription. These are the key price levels that traders are now watching to see if the patient's condition starts to improve or if it gets worse. Think of this table as the battlefield map. On the left, you've got resistance. These are the price ceilings the stock has to break through to show any strength. On the right, you have support. These are the price floors, like that recent low of $4.38, that the stock absolutely has to defend to stop an even bigger slide.
So, what's the most likely outcome from here? Well, based on the sheer weight of the evidence, a bearish continuation has the highest probability. That means the price probably fails at resistance and goes back to retest those lows. A little tactical bounce, maybe thanks to that oversold signal we saw, is possible, but it's likely to fail. And a true reversal, well, that's the lowest probability scenario right now.
So when you put all the pieces together, the trend, the momentum, the key levels, the technical verdict is, well, it's pretty darn clear. The charts are sending a very loud and unambiguous message of caution for NIO.
So the diagnosis for right now, today, is clearly bearish. But what's really fascinating is that long-term analyst price targets are just all over the map, from a super pessimistic $15 all the way up to a wildly optimistic $9. And that just leaves us with the ultimate question. The charts show a patient that's sick today, but can this patient actually make a full recovery in the long run? That is what everyone is going to be watching.
The content in this video is for entertainment and educational purposes only and should not be considered financial advice. All investments involve risk, including the loss of principal. Please do your own research or consult with a professional before making any financial decisions.